Welcome to Valkyrie Simple Finance. Understanding before investing. What is the stock market, really? Is it a casino, a giant trading screen, or something much simpler? The stock market is not a casino. It is simply a marketplace. When you buy a stock, you are buying a small piece of a company. That piece is called a share. Companies sell shares to raise money to grow, expand, invest, or reduce debt. Investors buy shares because they believe the company will grow, generate profits, or pay income. Stock prices move based on supply and demand. If more people want to buy than sell, prices rise. In the short term, prices move based on emotion, news, and speculation. In the long term, prices follow business performance. Stock exchanges are organized platforms where buyers and sellers meet electronically. Private companies are owned by a small group of investors. Public companies list their shares so anyone can buy them. The market feels risky because prices move every day, but volatility is not the same as permanent loss. The stock market is simply a tool, a system that allows businesses to raise capital and investors to participate in growth. So remember, the stock market is a marketplace. Stocks represent ownership. Prices move based on supply and demand, and long-term results follow business performance. In the next episode, we'll explain the main types of investments beginners should understand, including stocks, ETFs, and bonds. If you want to understand investing before risking money, subscribe and continue building your foundation.